Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, July the 14th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. I do the same thing in these daily market commentaries, but I layer on top of it some option strategies that I find to implement into my portfolio based on those assumptions I come up with from the economic data, the geopolitical environment, and my market analysis. So please play along as we are really here to try and teach you guys the thought process in going into implementing an option strategy into our portfolio. I have specific guidelines that we need to follow for any given assumption. It's not just buying a call for a bullish assumption or selling a call for a bearish assumption. Anything like that just is thrown out the window because we need to really dig down into what is going on in and around that underlying before we implement that option strategy according to our assumptions. All right, so, well, without further ado, let's get on with the economic data across the pond. Not really a whole lot. It's going to be a pretty quiet week this week, but we did here in the United States one thing we did get was European industrial production coming in at 12.4%, expected to be 14.9%, and they did lower last month's number down by almost a full percentage point. All right, back here in the United States, though, we did get NFIB, which is National Federation of Independent Businesses. This is a small business index, how the small businessman feels about the overall economy. And surprisingly, that came in at 100.6, expected to be 97.5. I think that had to do with some of the economies starting to open up here in the different states, right? So those guys started looking a little bit out in time and saying, hey, maybe we'll start doing okay with the opening back up. Now, how is that going to be reflective of the fact that we're starting to see a lot of states start to close down? I'll talk about that here in just a second. CPI coming in, Consumer Price Index coming in at 0.6%, expected to be 0.5, so slightly higher than expected. Core CPI, which strips out food and energy, that's Consumer Price Index, again coming in at 0.2%, expected to be 0.1%. So it doesn't seem like this drive up in fuel or in crude oil is really affecting the Consumer Price Index that much, really. We also have Bernard speaking later on today. Now, something to talk about with yesterday, and as a matter of fact, I'm just going to, we'll talk about that here in a second. I'll pull it up since I kind of mentioned it. Let's just take a look at what happened in the NASDAQ yesterday. Now, I've been talking about this for quite some time, that this tech sector has done very well and that we were starting to see maybe some glimpses of tech where people are starting to cover some of those longs, taking some profit. And I've been talking about going into the Dow, some blue chips that have been laggers. Now, it seems like mainstream media is talking all about that now. On Twitter and everywhere else, that everybody's thinking after yesterday that might be what's starting to go on. Well, I've been saying I think that this is going to happen. And, like I said, I'm usually ahead of these things, kind of like with a Tesla correction. But having said that, it does feel like some people are really wanting to cover some of these longs as we are getting closer to these the precipice of this. We're starting to see some of the main tech that stay-at-home stocks starting to correct a little bit. They've gotten ahead of themselves, I believe. Yes, it does make sense, but some of these blue chips are kind of undervalued in a sense if we think that the economy is going to start ramping back up. Now, yesterday, though, we really got this sell-off. A lot of people are throwing it out there that Pompeo, talking about China and locking in the South China Sea, how they can't really have this overarching marine empire around that, and that the United States was going to start taking a stronger stance against that. Now, yes, that was part of the catalyst of that sell-off, but I think more so it is really that California continues to start locking down. I mean, they're not going to allow restaurants, gyms, and going to the beach and things of that nature. As a matter of fact, they went further to say that school is not going to be in classroom. It's going to be done from home. Now, what does that do to the overall economy? Well, it's going to hurt it, you guys. Think about it. People, have to go to work, right? What are they going to do with small children, especially in elementary school, when they're sitting at home trying to work? Now, and they are expected, maybe they're an essential worker, they have to go in. How does that all culminate? I mean, is home daycare going to be a huge thing? Well, are these gatherings can't be more than maybe 5-10 people or whatever? They're going to make a mandate out of it. So is it that we have to hire somebody to come to our house to one-on-one with a daycare person at our house while we go to work? Well, at some point that daycare versus going to work doesn't level out. The income might be inverted. I'm going to work, but I have to pay the daycare person more. That doesn't make sense either. So this could be very major downfall in the economy based on that. That just can't, those levers and pulleys really can't work. So these schools shutting down for the year is going to be somewhat economically devastating going forward if that's continuing to be the thing. You can't have a 10-year-old sitting around at home making himself mac and cheese on the oven while you're not there, right? I mean, that just, that's not going to work out very well. All right, so the overall markets, I think we're coming off of that as California doing that, Atlanta maybe doing that, Texas possibly, and if they do it here in Arizona, it is going to start being a systemic problem across the board there. Now, NASDAQ is coming off of its lows, as you can see here, and it could be finding a bottom as this candle really starts to set up as a bottoming pattern where maybe that's all the correction. I don't think we're out of the woods yet. As a matter of fact, we could start to see, well, there's our disclaimer. I didn't mean to pull that up just yet. But what I'm talking about here is we're looking at this candle right there. We did settle above the 9-day simple moving average yesterday. We're probably just below that right now. As you can see with the chart set up, that candle there is starting to look like, a hangman doji or whatever, which usually will signal that there is a move to the upside when you get that nice big bounce off and away. But well off the lows in the NASDAQ, as you can see there with that bounce. Now, if we go over to crude oil futures, they are still holding on to that $40 a barrel. We stayed above that yesterday, above that $40 a barrel. Yes, we did toggle back and forth below that 9-day moving average right now, maybe just slightly above it, but showing that this $39 is key. $39 is the key number to keep an eye on. They are really defending that. Anything above that is going to kind of hold on to that $40 handle. I don't think 40 is as much of a point as this 39 mark there. Staying above 39 is big for the bulls. Now with that National Association of Independent NFIB, independent businesses, they could be helping support this just a little bit. Now we look at gold, off by about $3 on the day, as you can see there. One thing to note with gold, we're really seeing interest rates really fall off. As a matter of fact, basically 2s through 7s are at historical lows. We're looking at 10s moving down there below that, into that 0.5 or 50 basis point handle, which is an all-time low. Anything cracking below, I think it's 56 basis points, is a new low there and could really start sending the levers and pulleys out of whack as this dollar is starting to crack 96, so 96 cents. So that is going to be key to look at those levers and pulleys. As you can see, that's giving the bonds a move higher, as we know with the interest rates. If we have interest rates going higher, then that means the price is going lower. But what we're seeing right now actually is interest rates are going lower. So let me erase that. Interest rates are going lower right now, so price is going higher. It's the teeter-totter effect right there, all right? So right now, this move here means prices are going higher and interest rates are going lower. Now, we're seeing that in all of the other treasuries, and 10-year could be looking at a historical low again. So keep your eyes out for that as well. And then we move over to the VIX. You can see VIX is off on the day. Yesterday, we started getting that rally. It was really exacerbated at the end of the day. But remember, when I was doing the daily market commentary, we were seeing VIX start to creep up a little bit. Was probably a bit of a precursor to that sell-off as we were seeing the volatility start to rise. Now, like I said, we were seeing NASDAQ struggle a little bit. Here we have the Dow Jones up almost 270 points on the day, but it's right there at that point of control, and I've talked about that time and time again. I think that the Dow Jones is going to really have a tough time breaking away from this magnet. As you know, when two magnets come together, it's kind of hard to pull those apart sometimes. Obviously, if you have the poles backwards, then it makes it very difficult to keep them together. But when you're snapping it to metal, it's sometimes very difficult to pull that away. And E-mini S&P is positive on the day, but kind of creating a bit of a volume node right in and around this area here, as you can see, lining up with 3,100, just slightly above that right now, but still building out time and volume around this area in the 3,000s, which I do believe will probably hold on unless we really start seeing some bad economic data. But as of right now, it doesn't seem that terrible. You can see daily market commentary maybe should be done towards the end of the day. I don't know. It seems like everything reverses after the daily market commentary, which would lead one to believe we're going to sell off into the end of the day. I don't know if that's necessarily going to happen. I think most of the news is kind of out. We are very news driven. So anybody else starting to lock down, we could start seeing that really affect the overall equities picture, as it was kind of expected. We're pricing in an opening of the economy, but we are starting to see some not so great news coming out with this pandemic and people starting to really lock back down, or states start to lock back down. That's not going to bode well. Other than that, though, I haven't done anything to my overall portfolio at this point. I'm just going to kind of ride this out. Wait till we get some real discernible directions going here, whether it's going to be to the bullish side or the downside. I think my position with my deltas in my portfolio are well suited for where we are right now, especially if we're just going to kind of trend sideways. Would like to see Coca-Cola start to making some moves to the upside. It's trying, but not really making a major try. It's more of a high school try rather than the good old college try, right? Other than that, we got to go over our disclaimer, right? As we are an educational company, I'm not trying to solicit you guys to do any of these trades that I'm doing. What I'm trying to here to do is teach you guys how to use options. It's the best way to protect your portfolio and increase that overall yield there. So as long as you're following these guidelines, staying mechanical, taking the fear out of trading, you will do much better. And that's what I'm trying to accomplish here in these webinars and videos. So check out my webinar that I'll be doing tomorrow on Thursday. Also, Wealth Summit is this week, Wealth 365. That's a great one. It is all week long, so check that out. Sign up for it. Go to Pro Trader Strategies. Use our links so that they know it was me sending you there. And I'm on Friday at around 1 o'clock East, or 4 o'clock Eastern, 1 o'clock Pacific. All right, that's all I got for you. Other than, you know what? If you can't take that, take it easy.